Here's 8 of the best dividend stocks to buy and hold forever. If you're looking for the biggest cheat code to maybe make some passive income, live off of dividends in retirement, or achieve financial freedom one day, then dividend investing is exactly what you're looking for. Dividend investing can easily make you rich over the long term or in many decades, so have some patience because this strategy of investing is definitely not to get rich quick. Now, if you want to start dividend investing forever, then you're going to need to start investing in some dividend paying stocks. Hopefully high quality ones. Now what I mean by high quality is going to be dividend paying stocks that exhibit these 4 different traits. Number 1 is a history of dividend growth, which is the ability of the company to raise or increase their dividend over time so you could get paid more and more income or passive income and even grow your wealth as well. Number 2 is capital appreciation potential, because the total return of a dividend stock is not only dividend income, but also the share price appreciation as well, so we want to grow our capital as well in the long term. Number 3 is dividend consistency, or the company's track record for paying consistent dividends, which is especially important if you are living off of dividends in retirement. And lastly, number 4 is dividend safety, and that's the stock's ability to continue paying its current dividend amount, which is a sign of financial strength and resilience of the dividend paying stock. I'm also going to use Seeking Alpha, which is a really awesome and really cool investing research tool that I literally use to research all the dividend stocks in this video, from its growth, profitability, dividends, financials, and so much more. So if you want to check out Seeking Alpha, it will be in the link in the description of this video. So with all that out of the way, in this video, I'm going to go over 8 of the best dividend paying stocks that you can literally buy and hold forever, and that should also belong in every dividend investor's portfolio. I'm also going to pick several different dividend paying stocks from various sectors of the stock market. So you're not only well diversified, but you also don't have your eggs all in one basket. So let's get started. Coming in at number 8 in no particular order, we have Coca-Cola, ticker symbol KO, and this company is part of the consumer staples sector. Coca-Cola is a beverage company that not only manufactures but also sells various non-alcoholic beverages in the USA and also internationally. Coca-Cola sells a broad range of beverages to not only consumers but also restaurants and even retail stores. Coca-Cola sells a broad range of products under a huge umbrella of different brands like Coca-Cola, Diet Coke, Sprite, Fanta, and vitamin water, just to name a few. This dividend stock is a cash flowing machine and one of investing legends Warren Buffett's longest holding stock. Coca-Cola is up 135% over the last decade if you take into account its dividend and share price appreciation. Seeking Alpha also gives this stock a B grade for its dividend safety, a solid A grade for its dividend growth, and finally a perfect A+ grade for its dividend consistency. The dividend yield is just under 3% with a compounded 5-year annual dividend growth rate of over 4%, and it's been able to grow its dividends for 62 years. I like Coca-Cola a lot, not only because it has a wide moat, but also because it has so many consumer brands that people love globally. It has a great track record of dividends and also a great financial position on its balance sheet, from stable and predictable cash flows to this great company. Coming in at number 7, we have Microsoft, ticker symbol MSFT, and this company is part of the technology sector. Microsoft is one of the largest companies by market cap, and for good reason. Microsoft develops and supports software, services, devices, and solutions worldwide. They make money from so many different sources like Microsoft Excel, Microsoft Word, LinkedIn, their intelligent cloud business from Microsoft Azure, and other sources like Xbox, Bing, and Windows, which brings in a combined literally billions of dollars in revenue. Microsoft is up over 1,000%, yes, over 1,000% over the last decade, and crushes the likes of the famous S&P 500 index. Seeking Alpha also gives this stock a perfect A+ grade for its dividend safety, and another perfect grade for its dividend growth as well. And lastly, a solid A grade for its dividend consistency. The dividend yield is on the lower side of things of just 0.85%. However, Microsoft has a 5-year annual dividend growth rate of its dividends of over double digits at exactly 10.25%. And it's also been able to grow its dividend for 20 consecutive years. Microsoft is a great dividend paying company because those dividends will only grow and grow more as the company grows its revenues and net income to pay more dividends to you as an investor, and it also has a great upside potential through capital appreciation. Up next at number 6, we have JP Morgan Chase, ticker symbol JPM, and this bank is part of the financial sector. JP Morgan Chase serves millions of clients, customers, and communities in over 100 different global markets. And it's also the largest bank in the USA, with the key to its success being no other than CEO Jamie Dimon. JP Morgan brings in hundreds of millions of dollars in revenue thanks to its IB division, commercial banking, asset and wealth management, and consumer banking products and services. JP Morgan is up 434% over the last decade, and it even crushes the famous S&P 500 index. Seeking Alpha gives this bank a perfect A+ grade for its dividend safety, a B- grade for its dividend growth, and finally a solid A grade for its dividend consistency. The dividend yield is pretty good at around 2.3%, with a 5-year compounded annual dividend growth rate of exactly 7.14%. And finally, JP Morgan has been able to grow its dividend for 14 consecutive years. JP Morgan is a great, safe, and reliable, bank, but it's also an even better dividend paying stock. This bank has literally done it all, from growing its dividends, from growing its revenues, to even weathering the worst financial crisis back in 2008. And this company is super crucial to the economy, so yes, JP Morgan Chase will definitely be one of my top choices. Coming in at number 5, we have Main Street Capital, ticker symbol MAIN, and this company is part of the financial sector as well. Main Street Capital, based in Houston, Texas, has helped over 200 private companies grow or transition by providing flexible private equity and debt capital solutions. Private companies go to them because they build relationships and tailor transactions to meet the needs of their portfolio companies and their unique owners. Main Street Capital is up 306% over the last decade, and yet again this one has crushed the likes of the S&P 500 index as well. Seeking Alpha gives this company a B- grade for its dividend safety, a solid B grade for its dividend growth, and finally a C+ grade for its dividend consistency. And it also pays out its dividend every single month or monthly, so you get some great monthly passive income. The dividend yield for Main is the highest we've seen so far, for amazing dividend income of exactly 7.3%. Main also has a 5-year annual dividend growth rate of 3.76%. And lastly, it's been able to grow its dividend for the last 4 years. Main Street Capital is a great dividend stock for investors who want not only a high dividend yield, but also some sweet passive income every single month. Up next at number 4, we have AbbVie, ticker symbol ABBV, and this company is part of the healthcare sector. AbbVie is a pharmaceutical company that generates its revenues from selling its portfolio of branded drugs like blockbuster medications like whatever that is, I'm not gonna pronounce that one, Botox and other treatments in immunology, neuroscience and eye care, and so much more. AbbVie is up over 450% in the last decade and absolutely destroyed the likes of the S&P 500 index as well. Seeking Alpha gives this company a B- grade for its dividend safety, a good A- grade for its dividend growth, and finally a solid B grade for its dividend consistency. The dividend yield for AbbVie is solid at roughly 3.1%, with a 5-year annual dividend growth rate of 7.46%, and it's been able to grow its dividend for the last approximately 11 years consecutively. Now, AbbVie is a solid and great company for a dividend investor to invest their money to not only grow their dividends, but also have some upside appreciation as well for their capital. Literally, AbbVie has a growing demand for all of its products and services, and they have some of the best advances made in biotechnology today and for the future as well. Moving on to number 3, we have Chevron, ticker symbol CVX, and this stock is part of the energy sector. Chevron provides affordable, reliable, and even ever cleaner energy to consumers for more than 140 years. Chevron makes so much money through its energy business, encompassing exploration, production, refining, marketing, and so much more, as well as transporting of oil and gas. Chevron is up 142% in the last decade if you take into account its dividend and share price appreciation. Seeking Alpha gives this company a solid B grade for its dividend safety, an A- grade for its dividend growth, and finally a perfect A+ grade for its dividend consistency. The dividend yield for Chevron is great and high of exactly 4.15%. It also has a 5-year annual dividend growth rate of exactly 6.31%. And also, it's been able to grow its dividend consecutively for the last 37 years. Now, I know you guys might be wondering, like, what the heck, Marcos? Why are we going to be buying a dividend paying stock? that is mainly around gasoline and energy, when literally electric cars, electric vehicles, electric batteries are the new wave and here to stay, and it might make gasoline cars out of demand and obsolete. However, there's so many things that literally need gasoline, like airplanes, a rocket, a boat, trains. So many things literally need gas, not just cars, so this stock is definitely here to stay right now and in the future as well. Next up at number 2, we have McDonald's, ticker symbol MCD, and this company is part of the consumer discretionary sector. McDonald's is most of everybody's favorite fast food restaurant where they sell delicious items like fries, burgers, shakes, chicken nuggets, and so much more. McDonald's primarily makes money through its franchise model, where franchisees pay fees and royalties for the right to operate McDonald's restaurants. They do this by leasing properties to these franchisees, generating them significant rental income in the billions of dollars. So think of McDonald's as a real estate company and a famous fast food chain, the best of both worlds. McDonald's is up 305% in the last decade, where this fast food chain beats the likes of the S&P 500 index as well. Seeking Alpha gives this company a D grade for its dividend safety, unfortunately. However, it gives McDonald's a perfect A+ grade for its dividend growth and a solid A grade for its dividend consistency. The dividend yield for McDonald's is 2.32% with a 5-year annual dividend growth rate of 7.38%, where it's been able to grow its dividends consecutively for the last 23 years. Now, I'm personally from America, specifically sunny California, where literally every other mile, I feel like I always see a McDonald's on the side of the road where people literally go in all the time in the morning and at night during the day to literally get a quick, cheap, and delicious meal. Maybe it's not the healthiest thing to put in your body, like you could have so much better quality food to stay healthy, but that's besides the point because literally McDonald's makes so much money as a dividend investor from growing dividends and even for growing capital appreciation as well. Finally, coming in at number 1, remember in no particular order, we have Waste Management, ticker symbol WM, and this company is part of the industrial sector. Waste Management is everybody's favorite friend to keep their surroundings clean, spotless, and free of trash. Waste Management generates the revenues through various means like collecting trash, disposing of it in landfills, operating transfer stations, and recycling materials, with collection and disposal accounting for a significant portion of their income, and this company will always be in high demand forever. Waste Management is up over 413% in the last decade, where this company has also crushed the likes of the famous S&P 500 index. Seeking Alpha gives this company a solid A grade across all of its boards, from dividend safety, dividend growth, and lastly its dividend consistency. The dividend yield for Waste Management is on the lower side of things of exactly 1.47%. It also has a 5-year annual dividend growth rate of exactly 8.11%. And lastly, it's been able to grow its dividend for the last 21 consecutive years. Now, no matter what happens, if the economy is in a recession, a bull market, crashing or going up, literally recycling and even taking out the trash will always be in super high demand and a necessity for the economy, making Waste Management an excellent long-term stock for dividend investors to grow their dividends and even have some good upside potential. Now, if you want to see my entire ETF portfolio whenever I buy my own ETFs on a weekly basis of around $5,000 every single week, check out Blossom as a free investing app in the link in the description of this video. I'll see you there on Blossom. Now, if you guys like this video, please give it a like because this cute puppy did. Now, right here is going to be a video on some of my favorite ETFs if I had to choose just one to buy and hold forever. Now check out this video if you want to see some of the best ETFs to invest in under Trump's new policies and administration. I love you guys so much. Continue to crush in the stock market and take it easy. Peace.